Welcome back to Explain the Charts. Today we're diving deep into Amazon, ticker Amazon, to see what's happening with the stock and how the chart data aligns with recent news and events. We'll analyze the price action across multiple time frames, uncovering trends, potential reversals, and key price levels to watch. Amazon, a titan of the e-commerce and cloud computing worlds, has been facing some headwinds in recent weeks. The stock started strong in 2024, but has experienced a sell-off, likely driven by mixed second-quarter earnings and concerns about the broader economy. Despite the downturn, analysts remain bullish on the company, with many citing Amazon's strong cloud business, AWS, as a key driver of future growth. However, investors are paying close attention to the slower growth of Amazon's North America retail operations, and the company's antitrust battle with the Federal Trade Commission could pose significant challenges. Let's start with the daily chart, and if we look at the past 6 months, we can see a clear downward trend. The price has broken through several support levels, and the last 2 months have shown an extended consolidation period with a bearish bias. This indicates that sellers have been dominant, but a potential reversal might be brewing. There's a lot to unpack here, so let's move to the 1-hour chart to get a closer look at the recent price action. The 1-hour chart shows a more detailed picture of the recent price fluctuations. Over the last week, we can see a lot of choppy trading, with the price fluctuating between a range of $175 to $180.50. This suggests that neither bulls nor bears have taken control. The lack of a clear trend in this time frame suggests a possible consolidation period before a bigger move. While the overall bearish sentiment persists, this consolidation period could be a sign of a potential bounce back. Let's zoom in on the last 3 days to see if we can identify any patterns that might point to the direction of this potential move. Looking at the last 3 days on the 1-hour chart, we see a series of lower highs and higher lows. This pattern, known as a flag, often precedes a breakout, and in this case, it could signal a bullish breakout from the consolidation. This breakout could potentially push the price back towards the $180 to $185 range. However, it's important to remember that this is just a possibility, and the price action could just as easily break down to the downside. Let's now compare this short-term view with the bigger picture on the daily chart. The recent consolidation on the 1-hour chart is just a small part of a larger downtrend on the daily chart. The daily chart shows a clear resistance level at $185 and a significant support level around $170. The recent price action suggests that a breakout to the upside could potentially challenge the $185 resistance, while a breakdown to the downside could test the $170 support. The strength of any move will depend on the overall market sentiment and the company's upcoming earnings report, which could provide valuable insights into the future direction of the stock. Now, let's shift our focus to the 15-minute chart for an even more granular look at the current price action. Here, we can observe the price moving within a tighter range, indicating short-term volatility. It's important to note that the 15-minute chart doesn't reveal any significant patterns or breakouts yet, but it does illustrate the rapid fluctuations that Amazon is experiencing. This highlights the importance of being cautious and nimble when trading on shorter time frames. To summarize, while the overall market sentiment remains bearish, Amazon shows signs of a potential bounce back. The 1-hour chart reveals a flag pattern that suggests a bullish breakout from the consolidation period. However, this breakout could just as easily lead to a further decline. The daily chart highlights significant resistance at $185 and support at $170, and the strength of any move will depend on the overall market sentiment and Amazon's upcoming earnings report. If the price breaks above $185, it could signal a strong bullish trend. This breakout would be further reinforced if we see increased volume and positive news surrounding the company. On the other hand, if the price breaks below $170, it could indicate a continuation of the bearish trend. This breakdown would be reinforced by negative news surrounding the company and a decrease in trading volume. It's crucial to remember that these predictions are based on technical analysis and current market conditions, and the actual price action could deviate from these projections. When making trading decisions, it's always crucial to consider your risk tolerance and overall investment strategy. Don't forget to factor in the company's fundamentals, upcoming news events, and any potential market catalysts that could influence the stock's price. Remember, the stock market is unpredictable, and no one can guarantee future price movements. Always do your own research and consult with a financial advisor before making any trading decisions.